on to crypto, and we do believe this is a new asset class, so I'd like to feature it. I'd like to highlight our, we call it the Bitcoin Monthly Report. I think we're going to evolve it to the Crypto Monthly, but for right now we're calling it the Bitcoin Monthly. We also have some information in there about Ether. But in that report, you'll find one of the very positive signs that we've surfaced is that the 200-week moving average of Bitcoin. Remember, Bitcoin peaked close to 70,000 last November, and it got down to somewhere in the $17,000 range very recently. And that broke the 200-week moving average. So that was a very negative sign. So the technicians out there were saying, well, if it cannot reclaim and get back up there pretty quickly, then we're probably going to 10 to 13,000. So it has reclaimed the 200-week moving average, which is a little bit above, I think, 21 or 22,000. So that's reassuring.
Cryptocurrencies have partially recovered from their huge meltdown in the first half of the year. Bitcoin is up 23% from the bottom on July 2, and other cryptocurrencies are rising also. The first half of this year was a tough time for cryptocurrency. The stablecoin Terra collapsed when it lost its peg to the US dollar, and the exchange Celsius went bankrupt. These developments may have shaken investor confidence in crypto, causing them to withdraw their funds. Also, interest rates have been rising this year, and high interest rates generally make risky investments less appealing than they'd otherwise be. So we are finally seeing cryptocurrency rise after a tough first half. The question is, have we seen the bottom? Sometimes assets temporarily rise during mostly downward trends. This phenomenon is called a bear market rally, and we've seen it across several asset classes this year. Predicting a bear market bottom is like catching a falling knife. Even so, traders often attempt to predict one based on how the price behaved relative to critical indicators during previous bear runs. The assumption here is that history will repeat itself. One such rare signal has emerged, suggesting Bitcoin's decline may be flattening, and now is the best time to add exposure to the cryptocurrency. The Bitcoin mining difficulty ribbon, comprising short and long duration simple moving averages on the mining difficulty, has compressed for the first time in over a year, indicating minor capitulation. The previous bear markets, including the one seen in 2014, ended with the ribbon compression. Data provided by analytics firm Glassnode show. Minor capitulation occurs when those responsible for minting coins shut down operations, resulting in a decline in the hash rate and mining difficulty. That reduces the selling pressure, allowing for price stability and an eventual bull revival. Miners often sell coins mined to fund operational costs, adding to bearish pressures in the market. ARK Invest CEO Cathie Wood, in a new broadcast, has shared her latest outlook on the crypto industry on why she believes we are nearing the end of the bear market.
And the decline this time around, believe it or not, it was pretty intense, but was not as steep as it has been in the past. Normally it's more than 80% decline. So this was close, but we didn't quite get there. And then the other reassuring piece of news recently that came out was an agreement yesterday announced between BlackRock and Coinbase to partner so that BlackRock could, through its Aladdin Technology Solutions ecosystem, on which $40 trillion worth of assets sit, they wanted a seamless on-ramp into crypto that Coinbase is going to provide. So this is another legitimization of Bitcoin and crypto generally as a new asset class. Some of this may have been caused by demand pull, institutions saying, hey, we want to get involved, and they're trying, but the plumbing was just too difficult. So that's good. We did a study on institutions moving into crypto. You can see it in our Big Ideas 2022. You can see the picture. And if we're right, that 40 trillion just from BlackRock's platform hosting other institutions, that would translate, if you just took our study, which basically said if you want to access crypto, but you want to minimize, you're more focused on minimizing volatility than increasing your Sharpe ratio, then you would put 2.5% into crypto. And if you're more interested in the Sharpe ratio, so returns per measure of risk, than you are about volatility, you'd put 6.5%. So assuming that 2.5% on this $40 trillion platform, that's $1 trillion of demand. Now, it's not that, and that would more than double the crypto, the Bitcoin price right there, if we just assumed it was all done in Bitcoin, which this agreement is only focused on Bitcoin. Now, what that misses, however, is what we call illiquid supply. There are hodlers out there, holders for dear life, or I've forgotten what that's all about, hold on for dear life. And so the illiquid supply, according to our estimates, is about 14 million out of the roughly, I think we're into near 19 million, 18 to 19 million Bitcoin outstanding. So illiquid, 14 million. And by our calculations, only 3 million units are truly liquid. So the demand, if we were to see a $1 trillion increase in demand, then it would probably drive the price up much higher than the doubling that I just mentioned. You can see that work also on our website, arc-invest.com. Yassine El-Mandra wrote a report really focused on what institutional demand might do for the Bitcoin price. And so I'm really glad we have it. You can take a look at it and see our logic there. So with that, I think that innovation is leading the way, as it usually does as we're exiting a bear market. And we don't know if we're through with this bear market or not. We could be in a trading range, who knows? But I'm very gratified to see the leadership has shifted back towards growth and especially towards innovation. We are always the new leadership, almost by definition. We're focused on the future. What is the world going to look like, instead of on the past, which is what most what passive strategies and even benchmark sensitive strategies do. So hopefully this is a good sign that we have, I know it'll be volatile, but that we are on our way again.
According to Cathie Wood, we are exiting the bear market and getting set for another rally in the crypto market. However, this might not be immediate, as the outlook of the general market still looks bleak, especially with the raging inflation. Optimistic investors are hoping the deleveraging of Celsius, Voyager, and other distressed crypto firms marks the bottom for crypto. Analysts at JP Morgan Chase say retail investors have been driving the recent bounce in Bitcoin and Ethereum prices, and that the most intense phase of the crypto market deleveraging process appears to be behind us. In August, crypto investors will be watching to see if the SEC takes additional enforcement actions against crypto exchanges as it continues with its Coinbase probe. Investors will also be watching to see if Bitcoin can hold its current $23,000 level. The next Federal Open Market Committee, FOMC, meeting isn't scheduled until September 20, giving the crypto market a nearly 2-month reprieve from rising interest rates.